Hello everyone, welcome to the video of the day. What if the real problem isn't market falling, but the money itself disappearing from the system? This is something most investors are completely ignoring. Let me tell you. So let's take an example that the global economy is like a giant swimming pool. For years, central banks kept filling it with cheap money or low interest rate or easy loans. The markets thrived. It gave huge return. Stocks soared and startups boomed. But now the tap is turned off, and slowly, the pool is draining. This is called the liquidity crunch, and most people are ignoring it. So what's happening? In so central banks raise the interest rates aggressively, and they are still relatively high. The era of cheap money is over, at least for now. The borrowing costs are higher, money supply growth is slowing, and business are finding it harder to raise the capital, which is a very huge problem in last few months. And even strong companies are becoming very cautious. So what does it means to investors or people like us? So when money becomes tight, stock market growth comes slow, and the startup funding dries up. The main issue would be for the real estate companies. They would be facing some pressures on it, and the consumer spending will be weakening because less money is chasing opportunities. The most dangerous part about it, let me tell you, it would be the liquidity crunch, because the market won't crash overnight. Slowly, silently, like air leaving a balloon, and then suddenly something breaks. Every major crisis hits this underneath. Let me tell you, you would be knowing 2000 financial crisis, .com crash. The same signs were there over there also. So now the main question coming in the mind, that what would be the next procedure or the next step? Let me tell you, everything depends on central banks. So if interest rates start falling, liquidity returns. If they stay high, pressure builds. I would I would suggest everyone to keep an eye on US Federal Reserve very closely, because market don't just move on news, they move on money, and US Federal Reserve will be a huge impact on everybody's movement. What would be done by people, and what should you do? The main thing would be, don't panic, but don't ignore this. The four things which you need to do would be, keep an eye, keep an information, stay diversified, keep some cash ready, which I told my previous video also, and avoid high debt investments, because opportunities will come, and opportunities come after the liquidity returns. So yes, that's your money brief for today. Make sure to like the video, subscribe, because understanding money flow is the key to protecting your wealth. Share it with your friends, family, and colleagues also. Welcome to Money Brief. Let's grow.